Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today we are going to be discussing the rise of passive investing in India. What have the trends been like in 2024? There is a very interesting study by Motilal Oswal as well. And we'll get in Kaustubh as well from Morningstar to understand what's driving or fueling the rally that we are seeing in terms of investments and rising interest in this particular segment as well. Is it for new investors? Is it for experienced investors? This and more. So let's get in our experts today. Kaustubh Belapurkar, Director Fund Research at Morningstar Investment Adviser India, and Pratik Oswal, Chief of Passive Business at Motilal Oswal AMC, is joining in now. Gentlemen, good afternoon. Thank you so much for joining in. And, there has been a ongoing debate about active versus passive, but we are not getting into that. We'll just talk about passive individually and try and understand what has been fueling the big attention or the surge in passive investing that we have seen so far. But Pratik, let me start with you first up and talk about the survey that you have done. What has been the key takeaways from your index investment survey? How many people did you reach out to in this survey, and what's your big takeaway?
Hi, good afternoon. This is our second survey that we've done in the last couple of years, and the idea behind the survey is to really prove the point that this is not just a passing fad, but a fundamental shift that's happening in the mutual fund industry that's been happening over the last 5 years' time. So this year, actually, we've increased the coverage of our survey. We've covered almost 3,300 investors, and we've also added distributors, approximately 110 distributors to our survey as well. And essentially, the idea behind the survey is to understand really, how passive funds have really grown in people's portfolios, and what are some of the awareness numbers behind passive funds today, vis-a-vis what it was last year versus what it wasn't there. And some of the highlights of the survey show that as of the survey, almost 98% of all mutual fund investors who we've surveyed are actually aware of passive funds. So the whole industry was tackling the problem of awareness, I would say, about 4 or 5 years back, and today we're happy to share that awareness has grown, and about I think 63% of them have agreed that they should invest in passive funds. They believe passive funds offer very good returns. Diversification, simplicity, and also lower cost is responsible for why passive funds have taken off in a very big way. What we've also seen is that a lot of investors who've already allocated towards passive funds are also looking at increasing their allocations in passive funds this year. And approximately, there's this new category called smart beta funds or factor funds. These have also gained a lot of popularity in the last 1 year. So essentially, what we've seen is that there has been a huge movement towards passive funds. As of today, approximately 17 to 19% of the mutual fund industry is about passive funds, and we believe that this number can be a lot bigger in the future.
All right, take that point. So those are the key takeaways. Of course, we'll delve deeper into what the other insights were. But Kaustubh, coming on this, what do you think is the reason for that increased interest in passive investing? Of course, awareness is one, but what is generally working for this asset class?
Yeah, Sonal, good afternoon, and thanks for having me on the show. And I think Pratik made some very pertinent points about why has this been rise in passive over the last 5 years? I mean, if you just look at data, I think as an industry, passives were probably less than 5% about 5 years ago, and they're comfortably sitting north of 16, 17% as we stand today, and only growing, right? I think a couple of things to keep in mind, and Pratik alluded to them. So I think one is it's a very simple investment opportunity, right? You're just tracking an underlying, be it an index or an asset class, and it is a low-cost option, right? So a lot of, what we've seen over the past many years, a few things have happened. One is, there are newer and newer investors who are coming to the fore, and a lot of them, either don't have access to a, financial advisor or a distributor can help them pick funds, or even the whole space of active funds has become. There's so many options. Sometimes investors are just left with what we call a choice paralysis, right? You're wondering what to buy, and eventually you don't end up buying anything and losing out on sort of participating in the market. And that's where passives have played a very important role, where be it new investors who want to allocate to certain asset classes, to worry about, okay, which active fund, what style, what fund manager do I need to buy into? I'll just buy the market, right? Or a particular asset class. So I think that's where passives have really got a lot of traction, and I think continuing to we'll see that continue as we go ahead too.
Okay. So, Kaustubh, in that, since they are seeing traction, is there any particular category in passive funds which are more popular?
So actually, multiple. So I mean, if I, obviously, I think one caveat is, there's one big elephant in the room in terms of passive flows, and let's leave that out, which is obviously the APFO flows. But I think pleasingly so, you're seeing retail money, individual investor money, retail HNI money coming into passive, right? So you would see obviously a market cap based, index funds or ETFs getting a fair bit of money, and obviously so because I mean it's an important part of any investor's portfolio. So could be a more large capish Nifty 50 Sensex index fund or ETF, but you're also seeing passive launches, say in a mid cap or a small cap, which is happening. So the more market cap based, which are pretty popular. I think the other one which are have gained. They've been around for a while, but have gained more traction in the recent times, have been the gold and silver ETFs, or funds that feed into those. Purely, obviously, because as a diversifier in the portfolio, we've seen a good rally in gold prices given all the geopolitical tensions and uncertainty that's been there. So investors have been allocating to that. And I think thirdly, which Pratik spoke about, which has seen a flurry of activity, has been smart beta funds, where investors have looked to get into certain factor exposures. And, we've seen, again, a whole host of launches in the past, 12 to 18 months around, smart beta and sectoral sort of passive. So I think that's where a lot of action has been over the past, year and a half.
Okay, take that point. So, Pratik, say we have these categories, right? Index funds over ETFs. So, what would be the reason for, say, preferring an index fund over an ETF or vice versa as well? What did the survey suggest, and what do you think could be the reasons for doing that?
Yeah, so, in terms of, I think what has happened is, so maybe something I didn't cover before, that the definition of passive has also been broadened, according to the survey. I think if you asked anyone what a passive fund was 4 or 5 years back, they would say Nifty Sensex. But today what has happened is that, the definition of passive has become, international, it has become gold and silver, it has become fixed income, it has become factor funds. So I think people are realizing that, passive is not really just the broad-based benchmark like a Nifty 50, but also a host of other strategies that you can invest through an index fund format. But within index funds and ETFs, what the survey has shown last year was index funds were clearly favored by investors. But what has been surprising is that ETFs have sort of caught up over the last 1 year. More and more investors, especially the younger segments, do prefer ETFs over index funds. But overall, what we're seeing is that still, approximately 75 to 80% of investors still prefer index funds. And this is primarily because, index funds in India, unlike the West, are a lot friendlier, a lot easier to invest in. You can do SIPs, you don't have to have a demat account, you don't have to worry about liquidity on the exchange, and the returns are pretty much the same. So I think most investors tend to, choose a simplified option, which is index funds. A lot of investors who do want to get access to intraday pricing, who like buying and selling from a demat account directly, who want to buy, purchase and sell units on the exchange, do prefer ETFs. So I really think it depends on what the convenience factors for a lot of investors are. But overall, I think index funds are still winning.
Okay, all right. So take that point. That's what the comparison could look like, and how investors are looking at index funds versus ETFs. A very interesting conversation, but we have to take a quick commercial break. On the other side, we'll continue our discussion with Pratik Oswal and Kaustubh Belapurkar on rise in passive investing. Stay tuned. Welcome back. You're still tuned into MF Corner. We have with us Pratik Oswal and Kaustubh Belapurkar. We are discussing everything about rise in passive investing. We spoke about which are some of the passive funds which are seeing more traction. I asked that question to you, Kaustubh. Is it commodities or smart beta, etc.? Pratik, comment on this. You mentioned smart beta, but are commodities also seeing a lot of traction here? How does it work in this particular asset class?
Yeah, what is, sort of strange in this survey is that, we asked a lot of participants about, what the categories that you're most interested in. And we would expect that the answer to be, say, broad-based funds like, a Nifty or a mid-cap or a small cap or a, broad-based funds. But actually, the number one category that people are looking at is actually sector funds. So sector funds have, because we've had so many NFOs in the last 1 year, have actually taken the limelight, and those have got a lot of interest, especially from the passive fund investor side. So a lot of interest in sector funds. In terms of flows, what we've seen is that, as I said, there has been a broadening of, passive funds in terms of their answer, but there's a lot of flows that's happening that's beyond the Nifty 50. I think that has been the biggest insight where, if you look at traditionally, I would say 90-95% of flows used to go to Nifty 50, but today you have passive funds across gold and silver, which are getting extremely popular. You have, as I said, factor-based investing. I'll just give you a small statistic. About 3 years ago, if you combine all the factor funds in India, it would be approximately 1,000 crore. Today, those funds are, have assets of almost 45,000 crores, so almost 45x just in the last 3 years. So I think factor funds is one such play which is getting a lot of prominent action into people's portfolios. And lastly, also, what has happened is that now a lot of our distributor partners are also looking at passive funds in a very big way. So according to the survey, almost 10 to 15% of all the partners that we interviewed are looking at giving an allocation in their client portfolios towards passive funds, which is really not the case, about maybe 3 or 4 years back. So I think there has been a good amount of, traction happening with a lot of partners in this space, which was, mostly, I would say, dominated by, your retail investors, your direct investors. So I think there has been a broadening sort of, customer profile that has also happened over the last few years.
Okay, the biggest takeaway here is that 45 times AUM jump in factor funds. That definitely means the kind of interest that we're seeing there. And you spoke about the sectoral theme that investors are liking as well. NFOs in thematic funds or sectoral funds is something that actually dominated the flows as well so far this year, right? That is, I think, a conversation for a different episode altogether. But Kaustubh, then let me come to you. We've spoken about how there's awareness that is increasing, which are some of the categories which are seeing that increased focus as well. But if we become the devil's advocate, what do you think should be a reason to not invest in passive funds, or maybe who should not go ahead with this category investment?
So, just touching about a couple of things, in terms of also the flows that we've seen, right? So I think the one thing that I would keep in mind when I think about passives and, well, it's not for all segments of investors, but investors tend to think that they're low risk, but that's not necessarily the case, right? I mean, the whole idea is that it is the risk of the asset class. Yes, it doesn't carry the active manager or that specific risk, but it is still the risk of the asset class. So I think that's very important for the investor to keep in mind. And I think the other thing that you should, when you think about a passive fund, and we spoke at the start of the conversation that passives are gaining traction, but I don't think we've moved away from that bit, that it's never an active versus passive debate. I think both can coexist in portfolios, and that's how investors should look at it, depending on really the need that it fulfills in their portfolio. The one thing that I think investors should definitely avoid doing, actually a couple of things. One is, don't just purely invest in passives because it's low cost. I think that's one of the benefits, but maybe there's a type of fund which may not be suitable for you, while it might be low cost, may not necessarily be suitable for you. So I think that's something that's important to keep in mind. And secondly, and more importantly, while we've seen all the traction that's been there on sectoral and smart beta strategies, I would say that for many, many new investors or investors who are coming into the markets for the first time, probably stick to the more broad market cap based indices and don't get into some of these esoteric indices, especially if you're looking at past returns and investing, because that can be extremely problematic, right? Because I mean, these are nuanced exposures that investors who are looking to express a particular view would be taking. For instance, there's momentum that's actually gained, for the lack of a better word, a lot of momentum in recent times. And in fact, Pratik spoke about the rise in smart beta assets. I think the largest fund is about 8,000 crores now, right? One single fund, which is great if the investor, understands the kind of exposure that they're taking. I think that's something that investors need to keep in mind. If you're looking for plain vanilla exposure, stick to your market cap based passives and don't get into some of these more nuanced exposures, which is best left to, more sort of evolved investors, looking to fill gaps in their portfolios.
Okay. Take that point. So, Pratik, comment on this. As per your survey, what were some of the reasons that investors are not going ahead and choosing passive funds currently?
Yeah, so I think in terms of the survey, I think investors are looking at passive funds from a risk-adjusted return. I think that is the number one reason. I mean, it's quite an advanced reason. I'm pretty surprised by the fact that people do tend to understand terms like risk-adjusted return. So I think most people tend to think passive funds offer superior risk-adjusted return, which may or may not be true in real life, but that's what investors sort of have selected. Apart from that, as Kaustubh said, I think low cost is a big draw towards passive funds. A lot of people see passive funds as low cost mutual funds, and there is this theory that people think that maybe it's low cost, so it leads to higher return, which may or may not be true. And apart from that, I think the biggest reason to why investors look at passive funds is actually just plain simplicity. Today in today's market, you are looking at a lot of funds. Every category has at least 30, 40, 35, 40 options. And within those, you have sub options also. So for someone who wanted to just, choose a mid cap fund or a small cap fund, they really have to go out there and choose between 50, 100 options. I think a passive fund really makes life very easy and simple, where you don't really have to think twice. You can just go with the passive fund, and that's about it that you have to do. And also, what has happened actually is that the reason, and one of the reasons why we believe as an AMC that passive funds have gained more traction over the years is because back in the day, passive funds were extremely inefficient. The tracking errors on passive fund 5 years back were extremely high, and I myself wouldn't recommend investors invested in passive funds. But I think that that efficiency by tracking error has come down dramatically. That's number one, and also the returns have become more on par. I think if you look at any passive fund, maybe 10 years back, there was a huge difference between what an average active fund versus an average passive fund would gain. Today, the returns are pretty much very similar. So investors are not really losing out a lot by choosing a passive fund in terms of their long-term portfolio. So I think these are the reasons to why investors are looking at passive funds today. Some of the main reasons.
Okay, all right, take that point. So, Kaustubh, come in on this once somebody has looked at the passive category and they are looking at investing here as well. What are some of the factors that should be kept in mind while doing that?
Yeah, so I think a couple of things, right? So one is obviously, first you need to figure out what is the kind of exposure you're looking for, right? I mean, that's the absolute basics, right? In terms of your asset allocation, what kind of category you're looking at. So you start with that. Then you would tend to look at basically funds, and Pratik spoke about the tracking errors and the tracking differences, right? They've been coming off, and I think that's something I would very closely look at, because I mean, say for instance, you wanted to pick a fund from a particular passive sort of space, it could be a Nifty 50 or a Sensex. You have a whole host of options. You would tend to look at a couple of things. One is, how efficiently has it been managed in terms of the tracking error. So the lower, the better, so that it's really mirroring the index or the underlying exposure really, really closely. And that's what you want from a passive strategy. And then obviously, which is also a function of how cheap that fund would be, right? Because the lower the expense ratio essentially it'll help it track it closer. So I think those are a couple of things I would look at when I'm buying a passive strategy. I think just one thing to add to that, because we're talking about both index funds and ETFs, I think the industry has made a lot of headway in that, but that's something I would, maybe investors should keep in mind when you're buying an ETF. Just make sure that the price that you're looking to buy or sell at is as close to the INAV as possible, because there've been times in the past where the spread's been reasonably large, so you don't want to be overpaying or under sort of paid for that trade. So make sure that you take a look at that. Especially on very, very volatile, large market movement days. So I think, those are a few things that I would keep in mind.
Okay, well, point well taken, and important clarifications and factors to be considered as well. Pratik and Kaustubh, I had a lot more questions, but I have to wrap on the show because of paucity of time. Thank you so much for joining in with your insights on what's happening in the industry and what could the outlook be going forward. With that, we'll take your leave on this edition of MF Corner. Stay tuned for Closing Bell to take you through the last hour of trade.